Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Market. It's Sunday, the 13th of February, day before the big day for Valentine's fans, but weekend edition of the Bulletin Board Heroes, and starting off with Alba, where we broke that line of resistance from September and the 50-day moving average at, I suppose, the middle of January. A bit of a mystery is why the shares went so low below point 0.2, but anyway, they're back now, and after a one-touch rebound off the 50-day moving average, we've had a decent close above the old January resistance of 0.27, hoping for the shares to hit the top of that broadening triangle from April as high as 0.45, maybe as soon as the end of next month. Upside certainly valid while we're above the recent support for February, around 0.2 pence. So that's probably the best stop loss at the moment. If you want to make it tighter than that, maybe the 200-day line at 0.22, but otherwise a little bit fiddly. Moving on to a stock which doesn't have much charting data, but looks encouraging nonetheless. Arrow Exploration, I've looked at it recently. We have a situation where it looks as though the shares are in a rising trend channel from back in October, heading towards 14 pence, and hoping for the target there, 14, to be hit as soon as the end of this month, so maybe in the next couple of weeks we could get there. That said, on the basis of the easy clearance of January resistance at 9 pence, and also the way we've had persistently positive candles over the last few sessions. So that does suggest there's a bit of gas in the tank. The stock which has done even better in the recent past is Atlantic Lithium, which I will try and fish out from the selection here. So looking at this, you can see that the shares have been in a massive breakout over the last, couple of months or so. We broke a line of resistance from the early part of last year, but the current situations that we're looking for the shares to hit a resistance line. They're back from as long ago as 2017. That's heading for 70p. And the upside valid, at least while we hold above recent resistance, around 37 pence. So above 37, looking for as high as 70 pence over the next couple of months for Atlantic Lithium. So great looking situation there. Moving along to a stock which I cover occasionally, Cobra. The chart here suggests that we've got a mid-move consolidation, bull flag trading either side of the 200-day moving average. We've seen this quite a lot. Saw this at GCM Resources before a move to the upside, and that does suggest that we're looking for a target perhaps up towards the 2.8 pence level, especially while we hold above recent support at 1.55. So above that, looking for 2.8 maybe as soon as the end of next month. Stock where the bears have been biting and continue to throw stones is Chill Brands. Here the situation is that looks like we bounced off the floor of this broadening triangle from November. I've had obviously many false dawns before, but what's interesting now, I suppose, or would be interesting, is if we can get above the old November floor at 99.25 on an end-of-day close basis. That would suggest there's been a bear trap of sorts in place, and also an initial target there at 13 pence, which even although it's not great in the scheme of things, would be quite a result in percentage terms from where we are. The other positive here is the bullish divergence line there from back in November. Shares have bounced off that in RSI terms, and that does suggest that we could hit up to a reasonable target over the near term, so back in the 20s, but looking for just 13-14 pence at the 50-day moving average first for Chill Brands. Stock which hasn't been featured here for quite a while, but is back in business now, is Deltic. Here you can see that the shares hit the top of the rising trend channel, which had been previously drawn for them, so the charting can work now and again, and the view now is that at least while we're above the old resistance from October, around 2.7 pence, there could be further upside. Just how high that could be is suggested by a line I'm about to draw right now from back in June, and that's heading towards the 5 to 6p area, if I can just complete the line, and that could be hit over the next couple of months. So 5.5, 6 pence maybe by the end of April could be on the cards there for Deltic. I suppose if we're really lucky, 5 pence by the end of this month, but don't want to get too carried away. This stage only back below 2.5 pence, really delaying the upside scenario. Onto a stock which has also thankfully recovered itself. Here we've got Empire Metals after a few false dawns. Looking for at least the 200-day moving average at 1.9 pence, and then after that up to the July resistance at 2.5 pence, perhaps as soon as the end of next month. Upside valid while we hold above the breakout line there from November around 1.15. So that's also backed by a bullish divergence line. So looking reasonably strong there for Empire Metals, especially as we've actually closed above that gap down that we had at 1.4. So gap close reversal also helpful in that situation. Stock which I suppose intuitively would be recovering just with the end of the pandemic or end of pandemic rules, let's say, is Live Company, and that has been the case over the recent past. Just looking for the shares now to break above a December resistance at 4.75 pence. If they can do that over the next week or so, we could be looking to as high as 7 pence for the shares, maybe by the end of next month. Only back below 3.5 pence now, and the 50-day moving average really delaying the upside scenario. Onto a stock, Omega Diagnostics, where there was probably the most infamous leak of a placing in history, of the history of the small cap market, and that the result of that was that rather than having a placing or a fundraise at maybe 40 pence or 45 pence, and shareholders not being hurt too badly, we actually had a placing at 5 pence. Current situation, though, is that we've got a line of support there running down to 4 pence, which I suppose has to be the risk for the shares, given that we've had a failure at that resistance line there from November, but potentially 4 pence a rebound point for the stock as we try and absorb the stock that the company has issued. On to PetroTal, which is doing rather better in terms of its charting and fundamental picture than Omega Diagnostics by quite a long way. Here we can see that we've got a rising trend channel from back in August, top of the channel heading towards 50 pence, and that's valid while we hold above the initial February resistance at 34 pence. And time frame on that by the end of next month. Just a couple of stocks to go now, both of them of interest, I suppose, from a charting perspective. The first one is Premier African, where we've had a wonderful breakout, several days, blue candle days in a row, basically the whole month actually so far. So looking towards 0.6 for the shares, maybe as soon as the end of this month, or maybe in going to the middle of March, especially while we hold above the initial February resistance at 0.34. So above 0.34, looking for 0.6. Another situation which has come up with the goods is Predator Oil. Finish off with that today. Here we actually peaked up at what's the 12.95 level. Looking for as high as 14, so maybe we'll get that early this week as long as we remain above resistance on the way up here around 10.5. So above 10.5, looking for 14. Maybe even more, actually, the way things are going at the moment. Some very strong candles on the Predator daily chart. That's it for me today. More updates during the week.